Hey, good morning, traders. Morning brief video. Please retweet me on Twitter at Gumby9662C if you get a chance. Comments below on the YouTube channel really pretty appreciated. If you like it, don't like it. If you got some ideas, which I didn't mention, I really appreciate the feedback. We're all here to learn and make some money together. Okay. I really appreciate it all. Okay, guys, and like me on the YouTube channel if you get a chance. Okay. So, bottom line is, guys, we're at this 100-year resistance trend line here on the S&Ps. We're currently trading about almost right around 3% above that trend line. That was the close yesterday. And we are paring back some of the gains this morning in the futures contracts. If you go over to my TOS platform here real quick, 1 second here, let me get it loaded up. It's not wanting to load. There we go. Here we go. My TOS platform here real quick. So we are paring back some of the gains and stuff this morning here using my ES futures. Um, and so we have to think that we might be looking for a potential move all the way back down to the Friday close. Okay. So Friday close puts us down here. So that puts us right back down around 6,000. We're 6,073 right now, so we might be losing 73 points to get back down to that 6,000 level, uh, potentially today, last day of the week. So definitely a theory to keep in the back of the minds that could be playing out here as we speak. I've got another way of looking at this. Our 10-year or 100-year trend line is way down here. It's right around the 58.65 area. So heads up on that. 58.65 on ES futures. That's our 100-year trend line. There is a thesis that we could be closing at or near that 100-year trend line to close out the year. So just be very mindful that we could be the bigger theme going into the first of 2025, that we will be back at that 100-year trend line. So that thesis makes a lot of sense. That potential could be setting up here for the end of year close. So be very mindful of that in our trading. Uh, so basically what we had going on in the markets the past few days here. We had a big rally. We hit my upside targets Christmas Eve here, and we actually overshot it on the NQs uh, there Tuesday. If you put, I got my Andrews. Put the cues on here. I'm gonna put the cues on here. I got it drawn out right. Down to 2 hour. There you go. There's my Andrews pitchfork based on the current pattern we have. So we came in Tuesday, we overshot the Andrews pitchfork pattern. We came back into range yesterday near the close, suggesting we may have completed the upside pattern here. There's a potential here. You see how we've come down on the Andrews pitchfork. We found resistance right where we should find resistance. We might be topping out here, potentially topping out here on the Qs on this Andrews pitchfork pattern. So be very mindful of that. That may mean the Qs would be coming down with the ESs as well. Okay. I've got a pitchfork on SPY as well here drawn out. Similar situation. We came up above the market maker move high. It rejected here. A little bit shy of our true target on the SPY. So our SPY had a higher target, which we didn't quite achieve that yet. So there is that upside potential, but be very mindful here. Move back down to these lows down here. So that would put us down. What day was that on the yeses? Got to look here. I'm gonna double check it here on the yeses. So that was, yeah, this right down here. We came down, back tested the 100-year trend line, and then we bounced off of it. That's what we did. So there is a rule of thought here that we could be coming right back down to that 100-year trend line before the end of the year. So just definitely keep this in the back of your mind that all of this rally we've had off that recent sell off, that prior sell off. This could all be noise. Yeah, and we're starting to chop out above this 100-year trend line, or actually come back down one more, put a lower high in, come back down, and finally break below it. That's another thesis we have to be very mindful here in the market. So things happening this morning, and then on the Russell, what they did, they came in yesterday, bought up the laggards in the market, pushed them higher, and we did not uh, close above the gap. So I was looking for a close above that gap to suggest that we might be supported. We did not do that in yesterday's session. So this is very mindful that all this inventory up here might be in a lot of jeopardy. Okay. And if I was long up here and the way we closed there, I would be really concerned that we may not even come back up there for some time in the IWM. So be aware. And I know in another group that I'm in, there was a lot of people, they went net short IWM into the close yesterday. And so far this morning, it looks like it's getting paid. So be very mindful of that scenario, playing out here. Another big problem this morning is the ZNs. There's a real good chance the ZNs will okay, they're down this morning. Okay. So that means yields are down a little bit this morning. So be very mindful of that. So that's good. That's good because we just keep. Oh no, ZNs are down actually. So I'm sorry. Yeah. Okay. So down from the close. We had a little rally yesterday. We're down from that close yesterday. So it's not the end of the world yet. We're not breaking new lows and stuff. But there is a real theme that we're heading back to the 5% back test the first part of January under the new administration. Probably maybe possibly going into inauguration. And we may be all the way up to 5% into inauguration. So be very mindful of that scenario. We were down here, we were trading at 4.63%, I think, yeah, in yesterday's trading session at one point. So let's let's be very mindful on the T-bill yields and just be mindful that if that scenario plays out, that would not be very good for the overall markets in that scenario. So that pretty much sums it up. As far as this morning goes, I haven't really looked at it too closely yet here. So Tesla under pressure here. Tesla's under pressure. I just couldn't go long. I mean, I just couldn't. Uh, so we were closing below the daily point of control. Honestly, I mean, I would not even went swing long, knowing where we were closing in relation to the daily point of control. But we were closing below a trend line, below the daily point of control. Not really my idea of a swing long setup that I was personally would have wanted to take. Another one here. We are closing currently. Okay, yeah, we are closing below last week's close here on NVIDIA. So uh, we closed right at, yeah. So we are currently trading below last week's close here on NVIDIA. So be mindful of that. NVIDIA was showing early weakness yesterday. So it was the weakest yesterday morning going into the open yesterday. It was actually the weakest megatech in the trading. So we have to be very mindful that this is likely to lead to any type of downside pressure. One of our top watches we need to keep an eye on here, but it's not taken. We're one timing to the upside, and that is still in place. Until that changes, we don't want to uh, get too bearish to the overall markets. Okay. So, as long as these markets keep one timing framing higher, we're okay. But we're actually starting to show us some potential for problems here. For example, if you go over here on the Select SPY here, 30-minute. See, yeah. So we got a higher high right here, and we haven't broken this low right here. So we're still one time framing to the upside. So bias should still remain to the upside until we break this low, 598.05. If we break 598.05, then the script starts changing. Okay. But bottom line is the script is bullish until we break that. It's by the dip scenario. Qs probably are showing a little bit more weakness here and that, but see, you're getting about the same relative weakness here. So you're going to have to break 526.27 on the Qs and then IWM. It's holding out even a lot better here. IWM's holding out a lot better in relation. So yes, we do have a dip this morning, and it may not last very long. We are one time framing to the upside, so it's a bullish trend. Technically, backtesting support is a buy the dip scenario in theory. But then again, be mindful where that 100-year resistance line is. You're looking at 3% lower, which can happen in a heartbeat. A 3% lower move into the end of the year put us into major technical support. you know, Makes a lot of sense in my mind. That scenario could be playing out to close out the year. So, okay, that's all I really got to say here. If you guys have anything to add, let me know. Uh, let's see, is there any others here really standing out this morning? I know some other guys. They were looking at Amazon calls. How are they doing this morning? They're down this morning. I wasn't really a big fan of that. I was looking at Amazon, see where we closed here Thursday. Uh, for me, we're 1600 at. So we closed right here. So that was a real iffy long. The way I didn't like the way we came down to support, close at support. In this situation, I would not take swings. I would initiate swings the next day. We came right down to our major anchor view apps, short-term anchor view apps. We were already testing support into the close. In that situation, I would have not taken swing longs. Let's see here. Is there any other ones that I was actually looking for Microsoft rotation? Um, this one here is actually acting as support this morning. So, as far as you guys, if you think we're going to bounce this morning, this is one I'm definitely keeping on watch as long as we hold. We probably 436.60. Okay. Um, I'm really keeping an eye on that because remember we have a massive fair value gap above us here on Microsoft that has not been satisfied. So another attempt to come up here and fill this. Uh, I'm not saying we're going to fill it. I'm just saying uh, another attempt to go up there would, uh, if you're trying to do the see the fair value gap that came down on Microsoft. As far as Techland goes, this is one I'm definitely keeping on watch this morning. It is holding critical support. We'll see what happens here on that one. Other little quick thing, we got a fair value gap from last week here on Home Depot. Yesterday morning, it looked like we might be breaking out. This is day 2. We had a really nice tight consolidation right below this fair value gap. I mean, for any bulls out there, if you're, I'm thinking what's going to happen, because this is a light volume holiday week, that traders have all been piling into these fair value gap names, and just a few of them they've all been piling into the same names and driving them higher. Okay, and this one here really jumps out to me. This is day 2 of trying to get into this fair value gap. This one here really looks quite interesting to me. Home Depot for a move into the fair value gap, trying to reassert itself back around the 400 level, maybe 405. We could possibly get it all, but that's definitely one I want to be watching here today. And was another one here, Costco, COST. Costco, see how it didn't come up and try to push into the fair value gap. We got the big fair value gap here, but I'm gonna put an alert here at the bottom. I don't like this one nearly as well potentially, but Home Depot is definitely on watch. And if same token lows, we still got a fair value gap on lows here. See how the volume just completely drops off. Okay, similar situation on lows. We might have that similar situation setting up here uh, on that one. So, but we're still trading below this week's anchored VWAP. This is, it does look like we're trying to build a base here, uh, but just something to think about. A few of the names that I'm really focused in on. Boeing was really hot yesterday. Really not doing much today. Okay, and Nvidia and Tesla. Yeah, I'd be really concerned. Nvidia and Tesla, they use them to push markets higher, and they might be taking a break for a while. Uh, Maybe even Amazon, Apple. Uh, we should be a little bit concerned here. Where's the daily on that? Yeah, yeah, okay. Now we didn't do too bad here. Look at the weekly. Yeah, Apple's looking all right. Okay, okay. So Apple's still looking okay here. So you don't want to be short in something like that. Okay. All right, guys. Just a few things I'm looking at here and keeping it thoughts in the back of my mind, some things that might be playing out here. But it does make a whole lot of sense in my mind that we will be we could be 3% lower into the end of the year. It all depends on if the window dressing outweighs the technical support. So I don't know which way they're going to play this. So I just want to keep that theory out there just in case it does play out. Okay. Thanks a lot.